If you looked at a chart of Bitcoin, as many technicians have from the beginning of this year, they've basically said this thing's going back to 10 to 12,000. That's where it has support. It doesn't have much support between here and there. Well, guess what? It stopped at 15 and a half and it is now around 17. So it has withstood a massive amount of uncertainty in terms of what's going on in the crypto market. And one of the things we have been impressed by is how the Bitcoin blockchain and Ethereum, neither one of them skipped a beat in terms of operations. No transactions interrupted at all.
ARK Invest founder and chief executive officer Cathie Wood is deeply impressed with what she titles the latest rounds of battle tests in the cryptocurrency industry. This past month has undoubtedly been one of the roughest in the industry's 13 young years. Following the collapse of one of the world's largest cryptocurrency exchanges, FTX, crypto asset prices slid to multi-year lows and market sentiments took a big plunge. Many analysts, top traders, and investors believe that the FTX collapse occurring in the thick of a gloomy global macro environment would wreak a lot of havoc on crypto asset prices. And it did, not just on the scale they predicted. Not only has Bitcoin's prices remained thousands of dollars above the widely speculated $10,000 range, but crypto asset prices are also already showing signs of recovery in just a little after a month. In a recent episode of the In the Know broadcast, Wood explains that the FTX collapse and its impact on the cryptocurrency markets have once again proven the strength of decentralized systems over traditional finance. She compares it to the 2008 Great Financial Crisis and how banks scrambled around until the Federal Reserve stepped in. Though the cryptocurrency industry has not had such luck, it has remained relatively stable, which, according to Wood, shows how strong and efficient the industry has become. We will now take you to Cathie Wood's broadcast as she discusses the recent events in the cryptocurrency markets and ARK Invest's unwavering conviction in disruptive innovation. Please watch, share, and like this video. Also, ensure you drop your comments and observations in the comments section below, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy.
How the Bitcoin blockchain and Ethereum, neither one of them skipped a beat in terms of operations. No transactions interrupted at all. If you think back, if you were in the markets in 2008, 2009, the markets froze. Banks stopped processing. They didn't know where the counterparty risk was, and the absence of information, the absence of transparency, the market froze and the Fed had to come in. It was a near-death experience for the global financial system. Well, it has not been a near-death experience for crypto. And it's highlighting how important transparency is. We can see every transaction on the network by IP address. We can follow the money by IP address. And the decentralization of the network is also paramount. You know, it was very interesting that Sam Bankman-Fried never liked Bitcoin. Well, it's becoming obvious to me now, now that I know he never liked it, why he didn't like it. It's because it's not centralized. There's no way to control it, like he was controlling his empire. So it highlights this, the dual nature, decentralization, transparency, and regulators are beginning to understand this. The newest SEC commissioner, Jaime Lizarraga, still getting used to his name, he highlighted how important decentralization and transparency are. And a lesson learned from this crisis. And so from a regulatory point of view, the focus on those two variables could be very good for the crypto asset ecosystem. And then just to put into perspective the fallout from crypto, at its peak, the crypto asset ecosystem, all of it, I think there are more than 10,000 crypto assets. Most of them, or many of them, will not be worth much, but there has been a lot of speculation. The entire crypto asset ecosystem hit somewhere between 2.9 and $3 trillion. Is now down to roughly $800 billion. Now, put that in context. Apple is a $2.3 trillion company, one stock. So that just gives you a sense of how early we are still, and how unlikely it is that what has happened in crypto could cause a systemic financial crisis. Now, we probably are going to see more fallout, and we think we can dimension it. One of the ones not rumored, I think we have a lot of facts on this. DCG, Digital Currency Group, owns Genesis, and it may have borrowed roughly $1 billion from Genesis. So $1 billion, it could be between $1 and $2 billion. Now, to give you a sense of that, the Lehman Brothers bankruptcy claims were $1.2 trillion. So we're not talking anything like that. We are talking counterparty risk, again, shades or echoes of that crisis. Reinforcing this idea is with transparency, you will have a much better understanding of counterparty risk. With decentralization, the counterparty risk should be lessened. Closed ecosystems are not a wise idea, and human-driven decisions, especially in a moment of a crisis, as opposed to smart contract automated decisions, also tend to be, if not irrational, then in the case of Sam Bankman-Fried and FTX, possibly fraudulent.
Though the ARK Invest chief executive officer is not ruling out more price declines and a wider fallout from the FTX collapse, she is quite convinced that we are slowly beginning to put the crash behind us. In her broadcast, the renowned fund hedge manager also discusses the profitability associated with truly disruptive innovations. Following a massive decline in its stock prices, many investors and media personalities have criticized Wood and ARK Invest for being so focused on disruptive innovations like robotics, energy storage, blockchain technology, and artificial intelligence. Several people have compared ARK's stock price declines to the dot-com bubble burst, noting that the Florida-based firm is heading towards self-ruin. In her broadcast, Wood explains that during the dot-com bubble, many companies whose stocks performed better than ARK's now went bankrupt. But the hedge fund and its star stock picker chief executive have continued to make some very bold moves despite the price declines. Wood says they are still very convinced in their research and expect a 30-fold increase in the market cap of these innovations within a decade.
Every time we go through a battle test of the crypto asset ecosystem, I feel better. I feel better. If you look at the trajectory of Bitcoin, while the swings are wild, as Jeremy Siegel said on our podcast yesterday, he doesn't think there has ever been an asset where more people have made so much money, even after these losses, in such a short period of time, 12 to 13 years. So our conviction is as high as ever. And you will see from our Bitcoin Monthly, which will be out on Monday, how our on-chain analytics look even after this battle test. The outlook is positive based on on-chain analytics that show massive capitulation that we typically see only at bottoms. And that's why we're so impressed. We didn't get back down to 10 to 12,000. You know, a lot of the traders and hedge funds involved in crypto just look at the charts and press and press and press and press until they get what they want and get what they believe will happen. Well, that didn't happen. Now, I'm not saying it won't, but I think the odds have gone down quite dramatically, and truly impressed at the relative stability, especially in Bitcoin and Ether to some extent. What we encourage our companies to do, now that we are ready for prime time, is to invest aggressively right now to capitalize on some of the most important investment opportunities of our lifetime, of the last really ever. really ever. We believe that the market cap associated with truly disruptive innovation, transformative innovation, will go from 7 trillion now, less than 10% of the global equity market cap, to 210 trillion in the next 8 to 10 years. That's a 30-fold increase. That's exponential growth. And I think that a reason a lot of people have trouble with our strategy is we've grown up in a world of linear growth. And the last time many investors heard the phrase exponential growth was in the tech and telecom bubble. And there's a lot of muscle memory associated with that. Many of those managers became value managers. I know, and I hear them denigrate our strategy, perhaps because of their experience. We've been doing the real research on disruptive innovation. And according to Wright's Law, and according to all the learning curves, cost declines, and so forth, we are ready for prime time in the 5 areas around which we have centered our research and investing. Multiomics, so what we used to call the genomic revolution, robotics, energy storage, artificial intelligence, and blockchain technology. The technologies are ready. We didn't even get the cloud until 2006. We didn't have the big breakthrough in deep learning until 2012. We didn't get the cost of DNA sequencing down to $500 per whole human genome until this year. So, but we're ready for prime time now.
At $38.16, ARK Innovation ETF has lost around 60% of its price in the past year. The price decline has been even greater from its February 2021 peak. Do you think this signifies a severe weakness in ARK's research, or is it just the calm before the exponential growth storm? Please drop your comments and observations in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications if you are yet to do so. Thanks for watching.